Hello everyone, my name is Zach, and welcome to On Cash Flow, where I help you become a master of your own cash flow. Now let's get started. The short answer is that I do have only two major funds in my investment portfolio, and those two major funds right now are actually exchange traded funds, or ETFs. The first one is VTI, which is Vanguard's Total US Stock Market Index Fund, and the second one is VXUS, which is Vanguard's Total International Stock Market Index Fund. That is it. Only two funds in my portfolio. I keep it very, very simple. Right now, I don't have any bonds in my portfolio, and all of them are invested in Vanguard funds. So the reason for that is that I actually believe in Vanguard as a company. However, I don't actually have my money on the Vanguard platform, like on their website, but I do have my money invested in their funds. I chose to invest them elsewhere just because where I invested them right now has some amazing great tools for like automation and things like that, and so I just really liked that platform, so that's where I put my money. However, like I said, they are all in Vanguard ETFs. So now that you know which two funds I have, let's break it down to what my goal asset allocation is. So for me, again, it's pretty simple here. I have my goal asset allocation of 80% US stock and a goal asset allocation of 20% international stock. Now this could change, maybe one day soon I could add bonds back to my portfolio. I've always been thinking about adding, REITs to my portfolio, but for now it is only two funds, and it's only total US stock market 80% and total international 20%. And my reasoning for this, for my personal asset allocation, is first and foremost simplicity. I do want simplicity, and I've even thought about making it even more simple and just doing a total world stock market index fund, or a ETF in that case. I know Vanguard, they do have like a total world fund. They just have it based to where it's based on like whatever the world represents. But for me, I didn't want to do that just yet because the amount that they have towards US is smaller, because it's just whatever the US represents within the world. But I wanted a lot more US represented in my portfolio. And the reasoning for that is also many of the US major companies, they are global anyway, and so they get a lot of their profits from overseas already. And so my reasoning for that was the US stock market index already has plenty of international in their portfolio. They already get plenty of their profits from international. But also I wanted some allocation to international funds as well. That's why I have that 20% in there. And that just means that those companies are based internationally. So they could also get some of their profits from the US as well, because the global markets are so intertwined nowadays, right? It's probably just going to become more and more intertwined over time. But some other reasons for my current portfolio is that specifically when it comes to that international fund, international funds are so much cheaper, especially if you look at some things like the price to earnings ratio. An international index fund is a lot cheaper than the United States, and it has been for a very long time. Does that mean it's going to grow more than the United States? I have no idea, and that's why I don't try to guess 100% that the United States is going to be the top dog forever. And so I do have a little bit of my money also in that international. Additionally, having a little bit of that international adds some more diversification to my portfolio. And while I do strongly believe that diversification is very important, you'll also notice that I don't have a ton of diversification in my portfolio, as in different asset classes. I don't have bonds in the portfolio, right? So I'm not diversified in that circumstance. I don't have REITs in my portfolio, and so I'm not diversified in that circumstance. Although the total US stock market does have a small percentage of real estate as one of their sectors. I also don't have anything like, let's say, gold in my portfolio or silver. So while diversification is important to me, I'm also not diversified across every single thing, because I think that if you over-diversify, I think that over-diversification is something that does need to be addressed. And over-diversifying can lower your expected returns by lowering your volatility. And I'm not necessarily going for the lowest amount of volatility for an equal amount of returns, right? I'm willing to take on more volatility for higher returns. And it just so happens to be that with me, with my simple investing strategy, I think that having a broad array of stocks, both based in the US and based internationally, is going to give me a pretty high return in the long run. Even though I might have a lot more volatility in my portfolio, rather than if I had some bonds in there, or if I had some treasury bills, or if I had more cash or something like that. So I'm willing to accept that volatility. Another thing that I am looking to add to my portfolio, to add to my asset allocation, is more likes. So make sure you hit the like button on this video if you're enjoying this so far, getting an in-depth glimpse at my own asset allocation. So please hit that like button. It really does help me out, and I really do appreciate that. But let's get back to the asset allocation. And more specifically, what I want to talk about next is my goal rebalancing plan, because that's a really important part of your investment portfolio, right? And rebalancing. As we all know, your investment allocation can get a little bit out of whack, especially when the markets are doing some crazy stuff. This is my plan here for rebalancing my portfolio. Luckily, it is very simple. There's only 2 funds to worry about. So when they get out of whack between 80 and 20, I can rebalance them. For my rebalancing plan, I let them drift a little bit. So I'm going to let them drift anywhere from around 5%. So the VTI, it can drift from 80%, down to 75% or up to 85%. And then VXUS, the international fund, that can drift from 20% up to 25% or even down to 15%. And once it reaches those percentages, then I'm going to rebalance it. So I'm not necessarily going to rebalance it every single day whenever it gets out of whack by 0.01%, right? I'm going to wait until it reaches that 5% threshold. And that's a total threshold, right? So you can also apply that as an actual percentage, like based on its allocation. But for just simplicity here, remember I like simplicity, it's going to be that 5% total drift. So that's right now what my asset allocation plan is for rebalancing. If it does drift, let's say my VTI goes to, let's say, 86%, right? That's beyond the 5%, little mark I have there. So that goes to 86%. That means that the VXUS, the international fund, that would be down to, let's see if I can do the math here. So if that is 86%, then we're gonna have to add 14, right? So that means that the XUS would have drifted to 14%. Then I'm going to go ahead and rebalance them back to 80-20. So that means I'm gonna sell off some of the VTI and buy more VXUS. So that is my goal rebalancing plan. And then from there, if they drift out again, I'm going to do the same thing. But I do give them that little bit of buffer so I don't have to be rebalancing every single day. Why do I have a 2-fund portfolio? Well, first and foremost, as I've mentioned many times before, I like to keep my investments simple. I want to keep it almost as simple as possible. If I did keep it as simple as possible, I would only have 1 fund. But right now I have 2 funds. So I am trying to keep it very, very simple. That is something that's very important to me so that I'm not always worrying about my asset allocation. I don't try to make, drastic moves in changing my investments whenever I learn about something new. I do take my time. I'm pretty slow, pretty turtle. I'm pretty turtle when it comes to that, very slow moving. So I am trying to keep it simple first and foremost, but also I don't have any bonds more in my portfolio right now because I'm very young right now, at least as I make this video. I'm 27 years old, so I consider myself to be pretty young and I can take a lot more risk when it comes to my portfolio, especially since even though I did choose to become financially independent, I'm not trying to give up income completely. I'm still seeking a little bit of income per year, and so my actual withdrawal rate is going to be very, very low. New video on that coming soon. But I'm keeping my withdrawal rate low, much lower than the actual 4% safe withdrawal rule. And so I can take on more risk, and ultimately I want to gain more wealth that way by taking on more risk by being invested 100% in stocks. And actually I can afford to take on that risk in my opinion because I have such low fixed expenses. All right, I have a paid off house. Okay, this is the house that I'm in right now. This house is paid off, it's all mine. But also, I have other very low fixed expenses. That is something that I made very important in my life. I had to have very low fixed expenses. So less than 50% of my budget is a fixed expense. And if you want to know more on that, by the way, make sure you watch my videos that I made where I exposed my F.I.R.E budget. Okay, so that's really important if you want to know what I'm talking about here. But basically, half of my budget is discretionary. So I can afford to reduce my spending if the market were to make a significant downturn. So I can reduce it technically by as much as 50%. Now I don't want to reduce my budget by 50%, but if the worst case scenario comes, I really could do that fairly easily. And that is why I have a 2-fund portfolio. I want to know in the comments below, what is your asset allocation? What is your current asset allocation? How does it compare to mine? I'm really curious to know, so please leave me a comment below. And then after you do, make sure you check out that other video I just talked about where I exposed my F.I.R.E budget. Thank you so much for watching this video. I'm Zach from OnCashflow.com, and I hope to see you next time.